selloffs. The problem here is that we've got two very big gaps in the market at the moment that are going to have to get filled before this correction process is over. So again, we've got a good bit of work to do here in the markets. And the problem with these big sell-offs is that they occur so quickly that a lot of people don't have time to react. So there's a lot of investors that are trapped in this sell-off and they're panicking here and they want to get out. These are called trapped longs. So here's what you need to know before the bell. Yesterday, the market sold off. Again, we talked about yesterday morning. We are trading well into 3 standard deviations oversold right now. Even though the market bounced off the lows, we still finished down about 3% yesterday. But the market is very oversold on multiple levels. So again, kind of looking at where we are, the question is kind of what happens next. So the most logical kind of moves for the markets right now is going to be a bounce here short term because we're so oversold. Again, going into this, remember in June and July, we were talking about a 5 to 10% correction. While this has been very sharp, we are only down 8% from the peak. So we're still within that very normal correction process right now. If we travel down to the 200-day moving average, we're going to be right about 10.5% by the time we get there. And I do think that's a likely outcome of this. But before we get there, we're very likely, because of this deep oversold condition in the markets and the fact we're deviated so far now below the 50-day moving average, that we're going to get a correction. Now, kind of a reflexive bounce. The problem here is that we've got two very big gaps in the market at the moment that are going to have to get filled before this correction process is over. So again, we've got a good bit of work to do here in the markets. And the problem with these big sell-offs is that they occur so quickly that a lot of people don't have time to react. So there's a lot of investors that are trapped in this sell-off and they're panicking here and they want to get out. These are called trapped longs. These trapped longs are going to look for any type of rally to start selling into. So very likely we're going to have an initial rally potentially to get us back to kind of where we were a couple of days ago, which isn't a lot. But we get a rally to this level and potentially we have some more selling that comes in. Outside of that, the other set of resistance is going to be this previous bottom that we had at this other gap. So we have these two previous gap levels to fill. So a rally to that level, a decline, or potentially if we get a stronger rally, that's certainly possible. But I think once we get to those kind of levels, that these trap longs are going to look for an exit to get out of the markets. That's going to lead subsequently to a retest or a test potentially of the 200-day moving average. And that's going to get us back down to again, a level where I think we finally wash out all the sellers. And again, this may take another week or 2 or 3 before we get there, but we'll kind of wash out all of the sellers and allow the markets to kind of get back on its feet. But again, for right now, and this is kind of the rules that we go through in the article today on the website, is the rules to kind of navigate what comes next. Use rallies here as an opportunity to reduce risk and rebalance. We talked about that kind of ad nauseum going into this peak. I kept telling you, rebalance portfolios, reduce risk, etc. And y'all were emailing me and saying, why do you keep saying this every day? The markets are just going up. This is why. When this happens, it happens very quickly. And if you don't manage your risk along the way while the markets are going up, it's very difficult to do when you're in the midst of the sell-off. Now, one other thing that we talked about yesterday was bonds. And I said yesterday, take some money potentially if you're trading bonds, great opportunity to basically, take some profits here. Not surprising. Bonds actually did okay yesterday, but after that ISM services number, we lost some of those gains. But we're very, very extended right now above the moving averages here. So again, a decent pullback in bond prices won't be surprising here because we're so very extended. So again, a bit of a rally in stocks, a bit of a takeoff in bonds won't be surprising. Yields up today because of this, as well as stock prices up today. So again, we'll see a little bit of that reversion process starting today. Okay, that's what you need to know before the bell this morning.